Yo, it is the 23rd. I'm going to be doing a trade recap for yesterday's price action. I couldn't do it yesterday because I got fucking, what is it, evacuated. I literally just came back home. Probably gonna leave again tonight. But, alright. So, first of all, what do we see? My eyes go right here and right here. The reason why is because this is the previous day high and previous day low. It doesn't matter if it's like you can still label a previous day high, previous day low. It doesn't matter. It's not the like consecutive bar on the current day. Like this is still a previous day high, right? But we already took it out, so that's why I don't bother doing it. And what's the next one I see to my left that we could possibly trade up into is this one, right? And this one. Um, and then if I look to the right, where's the next level? Where's the next higher low that I could find? I can't do this one, right? Because this is the one that's current on the current day. So we don't know if this is a low yet. But what we do know is this is a low. So that's why I've marked out this previous day low right here. Now I drop down to the 4-hour. And immediately I'm thinking, or I'm looking for any open gaps, right? Do I see any open gaps on this leg? Not really. This one is open, but we already mitigated it, so it's not doesn't hold as much significance. Same with this one, right? You kind of see this one, but it's already mitigated as well, meaning it tapped into it, it touched it, so it already took out all those imbalances, right? So essentially, we kind of don't have any fair value gaps on this time frame, on this current leg. But what do we do? What do we do see? We do see it's currently just trending higher, right? It's kind of obviously just going higher. If it's going higher, you want to ask yourself where is price possibly going to go next, right? That's where you kind of essentially want to like guesstimate. This is the only time you can guesstimate essentially, is because you're finding your drawn liquidity. Are you gonna be right? No, but if it were up to me, if it were up to you, you would place your bet on, okay, if this is trending higher, I kind of want to see it take out these new levels of liquidity up here, which are the prominent highs, right? I think this one is just London high. I think, yeah, I'll delete that for now. So just the 4-hour chart, right? If we're trending higher on the higher time frames, where would price eventually go if we're just solely looking on the daily chart? If we're just looking on the daily chart, 4-hour chart, we can expect price to eventually hit up these highs, right? So now my targets are up here. Going down to the 1-hour. 1-hour is usually where I find most of the fair value gaps that act as a key level for me. So this fair value gap, I'm not drawing it out, is because this is currently active, right? For all we know, this candle could just go down lower and close this gap, meaning that it won't even be a fair value gap, right? If obviously price is frozen right now because we're on replay mode, but if price is still forming, you can't draw fair value gaps yet because they're still forming. What do we do see right here though? A bearish gap getting disrespected. Inversed it. Right? We can draw this one out because this price has already happened, right? And this candle is already solidified, meaning price is showing us that it just inversed this. So if we disrespect bearish gaps, what does that signify to us? That means we're bullish, right? So now my confirmation based on my 4-hour is confirming, right? It's confirming on the 1-hour that we're still bearish or we're still bullish. What other confirmations do I see? I see that, okay, we're also respecting this gap right here, you know? It trades back into it, immediately rejects. We're kind of respecting it. If we respect the gaps or respect bullish, that means we're going to trend higher. Disrespect bearish, respect bullish gaps is bullish, and vice versa. Right? And obviously on the 1-hour too, it's obviously just trending higher. You know, don't overcomplicate it. Don't try to think, oh, but it's trending down right here. You want to look at the bigger picture, right? Just zoom out. Just zoom out like this. The further you zoom out, and you're trying to draw a line with it, it's obviously just going higher, right? What else am I marking out? I'm gonna mark out this 1-hour intermediate low. 1 hour intermediate low. What an intermediate low is basically oh shit. It's basically just a low that gets formed after price touches a fair value gap and respects it. So this is also considered an intermediate low, and this is also considered an intermediate low. Yes, it's not technically inside, but it sweeps around it, right? And it swept this imbalance, so technically I would still label this as an intermediate low, which is the level of reference I want to see price trade into and then go higher since I'm bullish, right? Do I have any more key levels down here on the 1 hour? The reason why I'm looking down here and not up here is because up here will be my targets. Down here will be my key levels that act as a signal per se. That's why I'm marking out key levels down here that I'm anticipating price to trade into. And also, my eyes don't have to worry about over here either. I'm just focusing on right here since this is the prior day low, right? Like we draw it out on the daily chart. This is the lowest point I'm expecting, or I'm anticipating price to even be trading into this next day, because I'm not worried about all these levels down here. Price is not going to touch that yet, right? So if I'm marking out levels that I want to be referencing, like intraday, I don't really care what goes under here, right? For all I care is that whatever happens right here, is that's it. And if it does go, then usually those days are like just super trending days. We get a news day or anything like that. But majority of the time, we don't have to worry about price moving outside those daily ranges. There's nothing else I see on the 1 hour. Yeah, there's nothing else open I see on the 1 hour. There's no important like key level or important open fair value gaps. And what I mean by open is that they're just haven't been traded back into. So this right here is a fair value gap. But what happens here? It got traded into already, so it's not technically an open fair value gap, right? It's already been mitigated. Yeah, nothing right here, nothing right here. Nothing right here. All right, what do I see right here? Open fair value gap. Kind of see how it's open? So you have two options of drawing this. You can extend a box like this, or what I like to do to make my chart cleaner is I just make a line and I go like this. All right, 15-minute fair value gap. The reason why I draw a line right here is because whenever price taps into it, I'm just anticipating the reaction off of that, right? The zone, the box, it's the same thing essentially. I just think it looks cleaner with just lines. Helps me like kind of picture it in my head a lot better. But it's also ultimately preference. And another one I see right here is this one. Again, the size of the gaps do not matter, right? That's what she said. But all right, and then what else? 5 minute. 5 minute. There's nothing open right here. This also is a 5 minute, but I already marked as 15. So if it's the same thing on the 15, then I'm just gonna leave it as a 15. Oh yeah, open 5 right here. The reason why I'm marking these all out is because I don't know which one price is gonna eventually reject off of, right? Like, is it gonna do this? Like, this is a possibility. It does this, or it does this, right? Or it does this, or it does this. But I don't think it'll do this one, just because, like, if you think about it, if we're truly bullish, right? I don't want price going lower than like all the way down here, because at that point, this is such a deep retracement that, like, I don't know. I would want it to respect this kind of range, you know? Like, I don't want price to just go all the way down here, because from here to here, right? If this truly is the high and it does reject down here like I'm anticipating, I don't want it to just drop all the way down here, right? It would just be safer, and the trend would be stronger if it would reject halfway up here. But the reason why I'm drawing it out is because you never know, right? It's just in certain scenarios, you just don't know. That's why it's safer to draw that way and just have it ready, so you're not kind of scrambling when price does reach down there. All right. That was on the 15. 15, okay. 15. Again, I'm just looking downwards, right? Because if my trend, like I said, on the 1 hour, the 4 hour, and the daily is bullish, I need to look for key levels for price to trade down into before going higher. I know I sound like I'm just repeating that shit over and over again, but it's important to know that price has to manipulate first before it has to go higher, right? Because it has to seek liquidity. Like, we can't just enter right here, right? We have to wait for the banks to trade down lower and manipulate somehow, you know? Someone is going to get stopped out for us to be able to go enter longs, right? That's that kind of game we're talking about. Like, someone has to lose or someone has to be stopped out for us to enter into the right trend direction, right? We just want to be on the right side of the move. That's the whole point. Targets. Let me see. Yeah, I guess you can mark this as a 4 hour intermediate high as a target. Oh shit. 4 hour intermediate high. Just as a target, yeah. So 6:10 now. I'm gonna go to 6:30. All right, and keep in mind I'm bullish at this point, right? I'm looking for longs. I'm looking for a long setup. Okay, I'm looking for a long setup. Okay. All right. Now that I see price took this out already, I'm kind of like, okay, let me reassess. Let me reevaluate the chart. Like, is it still good to be entering right here? Do I want to enter when price is just bullish as fuck like this, right? Let's just say you have some FOMO and you see that price is just trending higher and we're like so close to this prior day high. You're like, dude, it has to get there. It has to fucking go there, right? And then you enter. Where is your stop loss going to be? Your stop loss is down here, bro. Like, this does not make any sense, right? So let's just say even if it does play out, this is not a good trade. Even when you backtest this, you're going to figure out that, damn, why the fuck would you even take that? You're just FOMOing in, right? So regardless, we're not entering yet. Retraces. Retraces. Boom. I think this is when I was interested in these yeah, right here. This, I was waiting for this key level to get tapped into this morning, or on yesterday, I mean, because what did it do, right? This is the key level I marked out prior to market open, right? And I'm anticipating price to touch this. So once price touched this on the 5-minute and this candle closes, what am I looking for, right? What do I see right here? A fair value gap, right? This, I only start looking for fair value gaps on the manipulation leg, right? This is my manipulation leg right here. From this low to this high. This high to this low is the manipulation leg. Why? Because this is the leg that touches into my key level, right? And now I'm looking for an open fair value gap. Open meaning it's untouched inside the manipulation leg, right? Oh my gosh. Oh yeah. All right. So what is the manipulation I see? Right here, right? Now I'm anticipating, meaning that I would be bearish if this gets inverse, meaning if price trades higher and closes above like this, right? If price trades higher and closes above like this, I will be bullish, right? Because what do I have? This is my strategy. I have my key level tap, which is the 15-minute fair value gap tap as a key level, and my drawn liquidity is bullish, right? As we already predetermined. My drawn liquidity is bullish and my target is prior day high. So I need to wait for key level tap, which is this right here. Any higher time frame level, right? Which is usually it's 15 minutes, 4 hour fair value gaps that get tapped into, right? And then I would take the inverse. And the reason why I'm on the 5-minute is because it's the highest time frame that was available. If we look on the 4 minute, there was also one available. This leg that touches it, there's one right here. The 3 minute, there's also one right here. The 2 minute, yeah, one right here. The 1 minute, none of the 1 minute. But you have to ask yourself, why would I take a 2 minute on the lower time frame where price is more choppy? Or I could take on the 5 minute, which holds more value, right? And if it closes in the 5 minute, I will have more confidence of the trade working out, right? So that's why the highest time frame is always important. And what do we get right here? We do not close. So at this point, at 7:20, I'm like, okay, longs are out the question at this point. This inverse did not work. I would have not have traded it anyways, right? What do you see happen again? You know, remember how I told you guys earlier that not every single level is gonna like immediately go the way you do it? That's why you have extra levels that price could potentially continue trading towards to. What did I do right here, right? It taps into this 15-minute fair value gap, which is also a key level that I had wrote out prior, right? And it's considered one of the key level because it's on a higher time frame, right? 15 minutes and above, 15, 1 hour, 4 hour, daily, etc. Right? And I'm on the 5 minute. So I'm waiting. From at this point, where would you say your manipulation leg, right? Just quickly identify it. 3, 2, 1, right here. This is the manipulation leg. Right? High to the low that touches it, right? Don't overcomplicate it. It's just a high to low that touches the key level. And since I'm on the 5 minute and there's nothing, I'm going to start going down from the greatest to least. Greatest to smallest. So 4 minute, there's none. 3 minute. Oh, I see one right here. Oh. Right there. 3 minute. Do we have one on the 2? Again, it doesn't really matter. Because if there's one on the 3, then we don't have to worry about the rest, right? Just focus on the 3. Why do I like this trade is because, one, it taps into a key level and immediately just shows us strength that it's rejecting this, right? It took 1, 2 candles to just completely reject that level. Whereas over here, when we tap into this 15 minute, right, we're kind of just chopping around, weak volume, no follow through, and it's just like wicky, you know? Wicks, whenever we see wicks, it's a sign of like weakness, right? We want to see big candle bodies. It's a sign of strength. So we're on this 3 minute now. This 3 minute candle is still forming in real time. But why? But I already have this gap open, right? So I'm anticipating at this point, there should be a timer right here of when this 3 minute candle will close. It should say maybe around like a minute. Let's just say it has a minute left, right? During that minute, what am I doing? I'm putting on my drawing tool. I'm anticipating where my entry is going to be. I'm thinking right here. Stop loss is going to be right here. And where's my targets? I flip to the 5 to look for any unfilled gaps. We don't have any on the 5. We don't have any on the 15. Don't have any on the 1 or the 4. So where's my next obvious swing point? The next obvious swing point is right here. It's just a high, right? This is the next swing point. Right? And all-time highs obviously is up here. And based on certain conditions, but don't have to worry about all this shit for now because just look for the lowest hanging fruit, okay, which is this high. So that was on the 5 minute. Yeah, 3 minute. Same thing. Doesn't matter. It's the same high. So now I'm on the 3 minute. I'm watching. All right, let's fast forward. I think right here. This is when it closes, right? So this 3 minute candle closes, and we get a closure through it, meaning the body traded through it and closed above the gap. That is the entry signal. The entry signal is when it closes. So after it closes, price hops onto to the right and creates this new bar. Then I'm entering at the open of this, right? So immediately when this closes, this will open. And that's what I'm immediately entering. Sometimes I'll enter like 1 or 2 seconds before this next candle forms just to get a better feel. But for learning purposes, it's always better to wait for the candle close and this new candle to form, right? Sometimes it might form down here. Sometimes it more form down here. But for the most part, you want to be entering after it closes, right? So my entry is right here, and my stop loss, or my TP is up here. Stop loss down here. And where's my break even? My break even is right here. There's gonna be a lot of nuances to this break even that I don't want to be getting you guys into yet, just because it's gonna get really confusing. But based on the strategy wise and based on just normal circumstances, this is where your break even should be. It's the high and the low, the high of the manipulation leg, just like how we identified where our open gap is, which triggered our entry. The same, using the same leg, you have to find the higher and low depending if you're longing or shorting, and you draw the line towards, right? And once price trades above it, you're gonna move your stop to where you entered, and now you're at zero risk. So it trades up higher. Boom, right there. I'm not moving my stop to break even yet, right? I want to get a closure above it. Okay, right there. Once it closes above, move my stop to break even, and let it ride. If this trade was truly how if your bias and drawn liquidity was correct, right? You should not, price shouldn't even go down to your entry anyways, right? The reason why we want to put that break even here is to prevent us, just in case we are wrong, that it does take us out. But if we are right, it shouldn't even like go anywhere near that anyways. So it's just like a precautionary measure. Yeah. Okay. And let's just say we're right here, okay? Another example I want to tell you guys too is, look, if we're like right here and we're kind of like chopping around, the candles get smaller, we're starting to see some black candles, like at this point, I think that you should just take a profit here, right? Sometimes price doesn't do exactly what we want, but we have to think about like this. Since we entered right here and we're all the way up here, what are we risking? If we were to take profit right here, we're technically risking 40 bucks versus like all the way down here. This is our actual risk to reward now, right? Because we didn't take profit. So you have to reconsider this. Like, just because our break even's right here and we're not taking profit because I want to wait for it to get to my TP, this is how much you're risking, right? Because essentially the trade is already up here and yet we're not taking profit. Again, that comes with a lot of discretion as well too, because for the most part when you're learning this, you want to be finding targets that are like based on the chart, right? You don't want to be entering X off feel, but for the most part, that's just something that you should think about, you know? Depending on the situation, obviously, you want to just aim for the targets, but if it's like super choppy and you feel like, oh my gosh, I'm kind of scared, then just take profit, you know? It doesn't hurt to take profit. It's just, you want to practice getting in the habit of like building the right, yeah, there you go, it eventually works out, but I think I took profit like right here. I was just like, honestly, it's edging there. There's no reason for it to not take it out. I'm just gonna take it there and go, you know? Like, usually I wouldn't do that just because I would anticipate just price running through it. But yeah, sometimes you just have to, like, this is discretion sometimes, you know? Yeah, I would say the key takeaway of this trade recap though is understanding that whenever you're marking out the key levels, don't think of those key levels as like a guarantee, right? You know how we saw earlier about it just hits this 15-minute and now I'm anticipating a trade, right? But I'm not entering yet because it hasn't filled 2 out of 3 of my requirements. It filled 1 of them, but not 2 out of 3 of them, right? You have to think about that sometimes, and yet that's why it's important to have multiple key levels on your chart to allow price to, you know, a little bit of breathing room. You don't want it to always be, you know, it has to go here, it has to do this, it has to do that. It doesn't have to do shit. You know, you just have to react off of price. You can't like guess. It's not guesswork. You know, you have to like let it show you what it's doing, and then you react with it. What else I was gonna say? Right. Okay. Yeah. That's it. I'm gonna be going over how to do exercises to find key levels a lot easier. It's pretty much straightforward, but I'm gonna be going over a video on how to like, on how what my eyes are drawn to whenever I open the chart, right? Because sometimes it can get kind of overwhelming if you don't know where to start looking. I wish I had like an eye tracker thing. That'd be sick. I think there is that. Huh? I can do that. Yeah, I can do that. Yeah, like an eye tracker to see where my eye goes first, and then you kind of see like what's this train of thought. Yeah, that's sick. All right, I'll post it later. See you guys.